Why the banking crisis isn't over yet, folks. Fernando doing another video for More Survivalists. Remember that if it's your first time in the channel and you're looking for advice regarding surviving an economic collapse, well, you're in a good place because I wrote the book, Surviving the Economic Collapse, which has now 1,100 reviews in Amazon. Thank you so much for the support over the years. You'll have the link right there. And also, Sweet Survival Skills. I suggest getting these two so as to prepare for what's ahead. So keeping updated with all the banking crisis, the Fed just raised interest rates by 1.75 points. Well, this is a little bit older. November 2022. But they're probably gonna look at raising it yet again this week. Now, this is gonna be a key. I think it's a day after tomorrow, Wednesday, is it? This week they're gonna be looking at raising it. How much they raise the interest rates will tell you how much trust they have in things getting better or not. We're looking at very, very difficult times ahead. There's just no way of avoiding it, mostly because of the things that triggered where we are right now. If you watch what happened with the Silicon Valley Bank crisis, it's mostly because of the interest rates being so high. The bonds that they had like half of their money invested in, it was, yes, poor planning, not diversifying enough just to be in a safer place. At the same time, showing fully understanding that they would be bailed out like they got in a way that was really not fair, because it's supposed to be deposits up to $250K, which is the average person that has how many average people have $250,000 just sitting in the bank, not invested in anything specific, just sitting there in the bank, $250,000 doing nothing at all. Who has that, right? It's not your typical. In fact, that was less than 5% of the accounts. So it just goes to show that this was pure speculation on this, on this little machine of theirs by which they keep benefiting from the inflation that is ruining the life of the true average people. So the thing is this. So as to control inflation, you need to raise the interest rate. So as to make money more valuable. Money is more valuable, harder to give away money. Therefore, you fight inflation. So you either save the banks or make them more protected against higher rates, or you raise the interest rates and you protect people from inflation. You can't have both ways. At the same time, if you press enough, you will have a very angry banking and financial community. Now, in Europe, they already adjusted and raised the interest rates, obviously because of the existing regulations that they have in place, because of how it's all structured, which is separate from Credit Suisse. Some people are confused about this idea that it's all the same. No, Credit Suisse is under the Swiss banking system, which is apart from the European Central Bank. It's not regulated in the same way. It's just under something completely different. So in the case of Europe, they already raised, betting on fighting inflation, and banks just taking that, or benefiting maybe from already existing tighter regulations in terms of what they could or could not do, which is not the case in the United States. So if they show a bit more fear going that way, that will probably show you that there's not a lot room to play around here. It's gonna be complicated for months ahead of time. And if you look at what happened with Lehman Brothers, that was 6 months before the crisis started in full in 2008, give or take. It's kind of like the same thing. Look, there's just no way of having a free meal here. This was already done. You're now just paying the consequences. So who's gonna be cracking first? Banks, stocks, people, inflation. You're gonna be they will probably be a lot more fearful of skyrocketing inflation. But if they are kind of playing it safe and betting a little bit more on getting away with even a little bit more inflation, that just shows that there's no room left for banks, that they are just pressing hard and just about to crack. This is what you see pretty much in all of these articles, how the Fed inflation fight fueled banking turmoil in 7 charts. And there you go. Prices began rising early in the pandemic and kept going up. And yeah, that is the true origin of all of this. When they destroyed the economies for pretty much everyone, small and medium businesses, since 2020, that was the start of all of this. And you're just seeing it unfold now. The Fed tried to catch up by aggressively raising interest rates, and they did that. But that puts a lot of pressure in banks, and it just makes buying bonds, which is basically a debt-based investment, less profitable and losing value. That triggers a crisis, especially in a bank like Silicon Valley Bank that had half of their assets in bonds. The Fed action led to higher borrowing costs, and so we got bond market sees biggest decline on record in 2022. And basically what I was just explaining. The bad news for banks like SVB, which had investment heavily in fixed rate bonds. And that is a lot of them. That's going to be a lot of banks are in this same position. Who are, at least for now, the big winners? The bigger banks. There's a lot of fear, and people are moving from smaller banks to bigger banks. Is it realistic? Is it really the case that your small town bank is a lot more vulnerable? Maybe it is not all that reasonable. Maybe it's not all that logical to expect that a small, well-regulated bank is more vulnerable than, because SVB was what, 16th largest bank in the United States? That's not a small bank, but it is just having this cowboy attitude of, yeah, we don't give a damn. We still put most of our money in bonds, and if it goes to hell, we'll get bailed out like they did. Anyway, guys, as always, prepare for these things as best as you can. My books will definitely help you in that regard. A lot of this, precious metals, a lot of Bitcoin going like up 20-30%. You have my referral for Coinbase, which is what I've been using for Bitcoin for a few years now. I have several videos on that if you're interested. And yeah, that's going to be all for now. See you in our next video. Have an awesome day. Take care.